Hi, this is Abhinav, and I welcome you. In this video, I'm sharing the India tax on social security benefits that you receive from US. In US, there is this system of receiving social security benefits if you have completed a certain number of years of service and all those things. Those criteria are there. So once the person completes that, then even if he or she moves back to any other country, he continues to receive social security benefit by the US government. So what would be, for example, a person comes back to India, so what would be the Indian taxation on the social security money that one gets, right? So let us discuss on that. Now, first of all, important to understand that if the person's residential status in India is non-resident or resident and not ordinary resident, as per Section 6 of the Income Tax Act of India, then that there is no tax implication to that person in India on that money, right? So you have returned back to India, you still qualify as a non-resident for the particular financial year, right? In India, we have the financial year concept, April to March. You have to see what is your residential status. So, if the residential status is non-resident or resident and not ordinary resident, then there is no tax in India on that money that you receive from US, right? Even if you receive that money in US bank account, there is no tax implication to you in India, because the fundamental principle is that for these statuses, the foreign incomes are not taxable, right? And there is also no disclosure or reporting requirement in India, right? Now, exception to that, there is an exception to that, is that if the amount is received directly into an Indian bank account, right? Now, it can be any bank account. It can be an NRE account, it can be an NRO account, it can be a resident account, whichever account. But if it is received directly in an Indian bank account, then the amount is taxable to you in India, irrespective of your residential status in India, right? Because as per the Indian tax provisions, if the income is directly received in India, it is taxable in India. There is an exception for seafarers whose salary gets credited in NRE bank account. There is a circular number 3/2017 by CBDT. That's a separate thing. But this money will be taxable to you in India. Now, in this case, if there is a double taxation, right, that is, the amount is getting taxed in US also, the amount is taxed in India also, then you have to seek the available relief under the India US DTAA, right? DTAA is double tax avoidance agreement. Now you have to see that document, the treaty, what relief the treaty gives you, right? But for checking the relief, to be eligible to qualify for the relief, you need to be a resident of at least one country. Either you need to, as per their internal tax law, either you need to be a resident of India or you need to be resident of US. If you are a dual resident, then you have to check as per Article 4 of the DTAA as to which country you tie break into, right? So, but at least you have to be a resident of both one country. If you are a resident of no country, you are a non-resident of US, you are non-resident of India, then you cannot claim the DTA benefits, right? And then in that case, there is no question of India taxation, because for a non-resident, the amount is not taxable in India, right? So okay, now, so that's why it is very, very highly recommended that if you have US incomes, like US investments or US incomes, always have a US bank account, right? Indian family law allows you to keep a bank account in US, keep your investments from your earnings in US. You need not to bring it back to India, right? So keep a bank account in US, take the credit in the US bank account, and then remit the money to India. Remittance is not taxable. Direct credit into an Indian bank account is always taxable, irrespective of your residential status, right? Okay. Now, if you are a non-resident and RNOR, you, which is not taxable, no reporting requirement in India. But if you are a ROR, resident and ordinary resident, in that case, it is taxable to, this money is taxable to you as per Indian tax law. So India's internal tax law totally ignores whatever the US tax law says on this. So US has certain provisions that up to a certain amount is taxable and rest is tax free and all that. India will totally ignore it. For India, it is taxable. It is taxable generally as other sources income, not salary income, because there is no employer-employee relationship that exists. It's basically in the other sources income, and it is taxable as per the Indian tax law. And here, since it is taxable, you need to check whether there is a DTA benefit, right? Okay. Now, if you see the India US DTA, there is an Article 20, subsection 2, sub Article 2, right? And I'm reproducing that article here, right? And I'm adding the respective the context in terms of the name of the country, right? So if you read the Article 20, sub Article 2, it says, notwithstanding paragraph 1 and subject to the provisions of Article 19, remuneration and pension in respect of government service, social security. So there is a specific provision for social security benefits in 22. So you did not check Article 23, which is the other income, right? In 22 itself, there is a provision: social security benefits and other public pensions paid by a contracting state, which is in this case US, to a resident of the other contracting state, which is India, because the person is a ROR as per the Indian tax law, or a citizen of the United States, shall be taxable only in the first mentioned state. What is the first mentioned state? US, right? So now, what is the implication? Right, the implication for this is that if you are a resident, an ordinary resident as per Indian tax law, or you are a US citizen, right? Now, if so in both these cases, the income is not taxable to you in India, it is taxable only to you in the US, right? So there is no India tax implication, right? Now, what happens in case of a dual, in case of a dual residency, the person is a resident of India as far as the person is a resident of US. In that case, you have to check if the person tie breaks to India as per Article 4, then the income is not taxable to you in India, right? Now, question arises that the specific mention is there of citizen of United States. It doesn't mention anything on the green card holders, right? So what happens to green card holders? Now here again, the green card holder, has to be an ROR as per the Indian tax law to claim the DTA benefit in India. If that GC holder is an ROR, till NR and RNOR, there is no tax implication. But if the person is an ROR, then the person can claim the DTA benefits in India, right? Now, whether Form 10F is required, because generally what happens is, if India allows credit of the assessee to take a DTA benefit, but says that you need to provide Form 10F electronically, you have to furnish, right, in the income tax department website. So now that requirement is only if you are a non-resident, right? So here the question of a non-resident getting taxed on social security does not arise, because it is only taxable once you are a if you are a resident, right? So in that case, since you are a resident, this requirement of Form 10F does not arise, right? Okay. Now, for filing, at the time of filing the tax returns, you need to, ITR 1 won't work, right? Because what is happening is, this is a foreign source income, right? So you need to fill schedule FSI, right? So you need to use either ITR 2, or if you have business income in India, you can use ITR 3, and you can disclose. This is just a suggestion from my end. This is just a recommendation how you can disclose. Definitely, one is you go in schedule OS, and in schedule OS there is a section whereby you disclose the amounts chargeable at special rates as per DTA, right? Even in that section, there is you can also add nil if there is a, if the income is not chargeable to tax in India, you can enter nil. So you can enter nil there and quote the DTA article reference 19 subsection 2, right? I'm sorry if I've just entered 90. Sorry, it's 20 subsection 2. It's my mistake. So just enter here 20 subsection 2, maintaining the tax rate as nil. Then go in schedule FSI. Schedule FSI you need to fill. So basically, you mention here, when you mention the income tax payable in US, whatever tax that you have payable in US, you need to mention. In India, you mention tax as per normal provisions in India as zero, right? There will be no tax relief that you will get, right? Because the system automatically will capture the lower of the taxation as per US and India. So, anyways, the result will come to zero. So, since there is no foreign tax credit that you are claiming on this income, you can write it as zero. No need to file Form 67, as no tax relief is claimed, right, on this tax that is paid in US, right? So, no need to file Form 67. And in Schedule I would also suggest that you go in Schedule EI, which is scheduled for exempt income, and mention the amount of income there, because it is exempt to you in India because of the DTA. So safe side, you can also go in Schedule EI and fill that income, right? So this is a bit about the India taxation of social security benefits. If you have any feedback, any comments, do share in the comment section. Thank you so much for watching this.